Ladies and gentlemen, my name is Greg Michalowski, Director of Technical Analysis and Trader Education at ForexLive.com. And I'm going to talk to you a little bit about the technicals that are driving the market here. Not necessarily an educational video here. I did one last night, so go to our YouTube page and be sure to take a look at that one. But I have been a little bit busy doing some grunt work, if you will, so I thought I would take a look at some of the technicals I'm seeing here in these major currency pairs. Let's start with the euro versus US dollar. And the thing that sticks out with me with the euro versus US dollar is a continuation of the market using this the 112.14 to 18 level as a resistance ceiling here. It was a floor in the month of April. It fell below that floor in the month of May after some consolidation around that level, and then we moved up and tested that floor level, which became a ceiling right here. And we did it again today in trading here today during Draghi's testimony. We went up to that level and found resistance sellers against the 112.14 to 18 level. Actually, we did it earlier in the day as well. We went up to that level here, and here. So three separate tests above near that 14 to 18 level, and each of the one found sellers. The final one, the market gave up. You can see how we had this big, huge wick right here. This is during the heat of the moment of Draghi's testimony. We started to move lower, started to take out levels with more excitement, if you will. Went below the 100-day moving average here, went below this trend line here, and the last thing that we did through here was hold that trend line, and that's always a good sign when the market starts to lean against things like the 100-day moving average and a broken trend line, and the market started to reverse to the downside. It's kind of the opposite of what we saw yesterday, where the market found support against the 100-day moving average after a bunch of gobbledygook and up and down action right here. After the Fed's beige book, the market found support there and moved higher right into our resistance area at that 14-18 level talked about just a little while ago. So the market's behaving what you'd expect it to do at certain times. Other times it gets kind of squirrely and choppy. But when the market settles down, it seems to be paying attention to things like the 100-day moving average. Also finding some support down here against the 100-hour moving average, 61.8% retracement. The last time we were down testing that 100-hour moving average, we found support against it too. So we're doing the same dance, different day, 2 days in a row. If we're going to go higher, we need to get above this 200-hour moving average. That's the green line on the chart. We've been sitting in between a 13 pip trading range between the 100 and 200-hour moving average. At some point or another, the market's going to break a little bit, but remember, we do have the unemployment statistics tomorrow, so don't expect it to go very far. Support levels on a break, I would expect to see against this trend line right here, and on the top side, look for resistance against the 100-day moving average and maybe the trend line. So this is a support, this is resistance, and we sit right in between that with the 200-hour moving average, 100-hour moving average in between. So kind of right in the middle, right? Okay, let's take a look at the dollar versus yen next. This pair is trying to find support after falling to the downside over the last few days. This is the 4-hour chart of this pair. And if you take a look at the move up from this low to this high, the 50% retracement comes in at the 108.49. And I earmarked that level in a post earlier this morning saying that we got to trust that level of support. Why? Because it's a 50% retracement. Why? Because we have these lows here. And so market remembers that. Markets will lean against that. Sellers from above will come in and take profit. Buyers who are looking for a dip will look to buy against a nice juicy level where risk can be defined and risk can be limited, and that's what they have done. And we've seen a modest bounce to the upside since that point. So this is a 4-hour chart. What does it look like on the 5-minute chart? Why the 5-minute? Because you want to see the price action. You want to see the testing of that 50 level here, that 50% retracement level. And not only do we test it once, but we tested it twice. So that's always a good sign to see the buyers are showing up once and twice, and it helps to push the market to the upside. We are just right now trying to get above what I call the minimum of objective of a move higher, and that is to get above this 108.81 to 84 level. You can see the reasons why I outlined that level as a level to get above and stay stay above, and we're trying to get above that level right now. Now, because the market's been trending to the downside, we do have other resistance levels above that are going to get in the way here. It's not easy to retake what was taken on a move to the downside or a move to the upside for that matter. But I want to focus a little bit here on the 200 bar moving average on the hourly chart. That's a green line in this chart. Why? Because you see what happened up here against that level. The market found resistance sellers against that level through here and right here. And the market moved lower against that. And if we go back even further on this trend move to the downside, just follow that green line, Ooh, there's another area up here where once again the market found sellers against that 200 bar moving average. Can you see the pattern? You see what traders are doing? They're leaning against that 200 bar moving average on the 5-minute chart. Would you believe that? Yeah, sometimes it happens like that, and it all started to go downhill right around here where the two moving averages, 100 and 200 bar moving average, came into play together. And lo and behold, the last thing the market did before moving to the downside here was test the 200 and 100 bar moving average. And so there's lots of tests of this 200 bar moving average. And maybe that's the lesson in trading here today, is you find these patterns, and if you find these patterns, then you can expect that maybe there'll be sellers against this 200 bar moving average. And if it doesn't hold that level and it moves above, then maybe we see a move further to the upside. So this would be a key level in trading going forward, the 200 bar moving average on the 5-minute chart in a dollar versus yen. All right, let's take a look at a couple other pairs here that are of interest to me at the moment. The strong versus US dollar. Not so much what we did here today, because look at it. It's been just a choppy mess here. You didn't need to be. This is a day where you stay away from the currency after this move to the downside here. This trend move to the downside. Trends lead to non-trends, and that's what we're seeing here. This is the trend part. This is the non-trend part. So the market's trying to consolidate a little bit. Now there is a level here that is of more interest to me on the downside than where we bottomed out, and that is the 100-day moving average. That's the blue line in this chart. That level comes in at 143.39, and in the month of May, the market found support against that 100-day moving average once, twice, 3 times or so. And so if we do get a move to the downside toward that 100-day moving average, look for support buyers against that level where risk can be defined and risk can be limited. Right here where we're at right now, I don't really, it's kind of in the middle of nowhere, where for me there's nothing really here, and it's the choppiness that we're seeing in the trading. But if the market should try to do this, not that, but if the market should try to do this, and head down to that 100-day moving average, then look for buyers right here against that level. And if it goes below it, look for them to stop themselves if the market should go and break below that 100-day moving average. That would be the risk defining level for that currency pair. Finally, let's take a look at the dollar versus Canada. This currency pair tried to break to the upside here after we saw oil prices move to the downside after peaking, and then it couldn't sustain. It couldn't sustain the oil prices going down. Oil prices have recovered a little bit more. I think trading around the $49 a barrel range currently at the moment. So we saw the market rotate to the downside. Like the sterling versus US dollar, lots of up and down action here. I think the trade today was maybe on the failure of this trend line here, leaning against that. And the other thing that you've note here in this currency pair is how the 100 and 200 hour moving average are converged right here, and how the market found support against that on the test through here. So going forward for the dollar versus Canada, this level right here where those two moving averages come together is obviously going to be a key line in the sand for traders. If the market should stay above it like it is, or the buyers came in against that level, forcing the market higher, we do need to get above this trend line and stay above that trend line though. If the market should go lower or lean against this trend line and come down lower, where do we have to get below and stay below? Obviously, the 100 and 200 bar moving average would be keys for that currency pair. going forward. So there you have it. Maybe you learned something off of today's video, but I also was able to cover a lot of things in the market for you in some of the major currency pairs where I see some key levels going forward. Once again, we do have the employment statistics coming out tomorrow. It will be the 100th month since the job depression started in 2008. 100 months. Make sure you sign up for the webinar that Boris and Kathy and Ryan will be giving tomorrow through that employment report. You don't want to miss that one, so I'll put the link on this post for you so that you can sign up for that. I hope you learned something and also learned a little bit about where the key levels are in the market. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.